Hi, this is Vic Hartman with the Hartman firm, and today I'm going to talk about two topics related to fraud. One, why do people commit fraud? And two, what types of fraud are they going to commit? Why do people commit fraud? Why would an individual make a materially false statement to another individual, an organization, or a governmental entity, knowing they're going to create a harm to that victim, sometimes grave harm? And they know there's a great chance they could get caught, creating great embarrassment to themselves, having to pay the money back, and the very, very real prospect of going to prison. So why would somebody commit fraud? Well, we should probably start that conversation with Dr. Ronald Cressy. Dr. Cressy was a noted sociologist and criminologist, and he studied fraud. He theorized that if three things were present, that fraud was likely to occur. It has become known as the fraud triangle. So what are these three elements? Well, Dr. Cressy studied fraud extensively. He talked to lots of fraudsters. He interviewed an entire population of fraudsters, and in doing that, three things emerged. And if these three things were present, he theorized that fraud would occur. So what's the first one? Opportunity. This is probably the most self-evident of all of them, because if you don't have opportunity, the fraud just can't occur. But what's instructive about this is where an organization can build internal controls to prevent the opportunity from occurring in the first place. What's the second element of the fraud triangle? Pressure. This is pressure on the individual. It could be a financial need, an addiction to drugs or substances, a pending bankruptcy, pressure to make the numbers, or emotional issues like pride and shame in the workforce. So that's the second element. What's the third? This is rationalization. So why rationalization? Rationalization is actually a defense mechanism. Us, as part of the human condition, we just can't perceive ourselves as deceitful, doing something wrong, or a fraudster. We can't look in the mirror and envision ourselves as being a fraudster. So therefore, we put up a defense mechanism known as rationalization. These rationalizations could include, they owe me, I'm underpaid, I'll pay it back, everybody else is doing it. The list is pretty long. So these are the three elements, the three legs of the fraud triangle. What's instructive about this is if we can knock out one leg, then we can prevent fraud in our organization. How about opportunity? If we can install an internal control where nobody has the opportunity, that will stop it. And just as effectively, even if we can't install a perfect internal control, we can install a perceived internal control. Because if there's a perception of detection, then somebody won't attempt fraud for the fear of getting caught. What about pressure? There's actually two types of pressure. There are those that's unique to the individual outside the organization, like the drug addiction, divorce, bankruptcy, something unique outside the workplace. And then those that are internal to the workplace. This could be self-imposed pressures to meet the numbers, or it could be coming from management or above, putting a pressure on the individual to meet their numbers. And lastly, rationalization. Now, how would we go about developing a mechanism to defend against rationalization? Well, I'd like you to think about this in terms of soft controls. Soft controls are how do we look at the culture of the company? What about the tone at the top? And is it resonating with all the employees of the company? So that's the fraud triangle. And if all these three elements are met, now we have a motivated, aggressive employee that's trying to commit fraud inside your organization. What fraud will they commit? This is the why. What is the what? What fraud will they commit? How many types of frauds are there that they commit? Is there a list of frauds they commit? It's almost unfathomable that we could understand all the particular frauds. Well, luckily we have an association to help us. It's the Association of Certified Fraud Examiners. This association is a worldwide organization, has in excess of 75,000 members, was founded in the 1980s by a former FBI agent, and they've developed it's known as the fraud tree, but it's the occupational fraud and abuse classification system, affectionately known as the fraud tree. So the fraud tree, like any tree, has branches. This tree has 3 branches. Now a large tree will have branches, right? Limbs, twigs, and leaves. And on our fraud tree, we'll call those subclassifications. For the purposes of this video, though, we're just going to deal with 3 main branches. So what's the first one? Financial statement fraud. Well, for this branch, there's good news, bad news. The good news is, of the three branches, this occurs with the least frequency. The bad news is when it does occur, it can be very significant and even result in the demise of the organization. An example could be hiding debt off the balance sheet, ergo Enron. Or it could be manipulating the revenue to have revenue recognition to deceive Wall Street analysts, inflating the numbers. Probably the most common type of fraud, of financial statement fraud. What's the second branch of the fraud tree? Corruption. And one of its major subclassifications is conflicts of interest. So we generally think of corruption with elected and appointed officials, and unfortunately that's all too common. But it also occurs inside of organizations, especially on conflicts of interest issues. Take an example of the corporate official who's in charge of purchasing. Maybe this purchasing individual also has a hidden interest, an ownership interest with an outside vendor which is not disclosed. That would be a corruption type issue. What's the third branch of the fraud tree? Misappropriation of assets. Now here we have bad news, good news. The bad news is this is the most common form of fraud within an organization. It can include P-card abuse, skimming, inventory theft, check fraud, embezzlement. It's a very long list and subclassifications that deal with this. And as with all the branches of the fraud tree and all frauds of the fraud tree, the longer they go, the larger the fraud. So early detection is always the key. So what can we do now that we have a classification system for all frauds? Well, we can apply the fraud triangle and as defense mechanisms for each types of frauds that can occur. Most importantly, opportunity. If we can understand all the frauds that can occur, we can start developing defense mechanisms around those. If you would like a complete listing of the occupational fraud and abuse classification system, please send me an email and I will gladly send it to you. There's one limitation to the fraud tree. It deals with occupational fraud, which means frauds inside of an organization. So it does not deal with frauds like investment frauds, Ponzi schemes. It doesn't deal with cyber scam frauds or computer attack platforms. And it actually does not deal with the most common fraud in the U.S., which is government beneficiary and insurance fraud, especially as it relates in the healthcare fraud industry, which may approach $150 billion in the U.S. So what we've accomplished here, we've told you the why people commit fraud, and the what types of fraud will be committed. Join me on the next video where we'll apply the principles from the fraud tree and the fraud triangle and discuss the fraud life cycle.